the View from ADB. We are here in Frankfurt for the Asian Development Bank annual meeting, and today I'm joined by Gurumurthy, Head of Corporate and Institutional Banking at RBL Bank. Thank you very much for joining us.
Thank you, Stefania.
So RBL Bank has had a really interesting and very positive few years. In terms of your compound annual growth rate, both top and bottom line, it's increased by over 50% in the last 5.5 years. Even if we look at your number of branches, they've more than doubled to almost 200 at the moment since 2010. What is behind this strong growth?
So let me first start with it's a little over 50% CAGR for 5 years.
Exactly.
So the absolute growth rates are far greater. We are about a little more than 10x from where we started as a bank. To go back, I think when we all came in, I think the big story was how do you build a high quality banking franchise to pick up on a relatively undermanaged bank and bring in good practices and market opportunities anyway we were convinced about. Even at the worst of times, Indian GDP growth possibly faltered and came to around 6 or a 10-15 year period. We were sure that it would be a 7% minimum kind of a growth rate, and the growth rate was in a sense given for the industry. It was all about do we get to plan right and do we get to execute it right. I suppose that's what has worked. We got in some very high quality investors who backed us for the long run. Consistently people have come in, which now include the likes of ADB, CDC, IFC, all of them, who are all there backing us with long-term capital. So we put in some high-quality technology. Our business, in a way, is very simple. It's about capital, people, and technology. Ring-fence them with some good processes, right? And don't let temporary opportunities let you stray from the path. But if you stay your course, that works in the long run.
And RBL is, of course, a fully fledged commercial bank, but you're also making it a point to look at what in India is called priority sector lending or financial inclusion related lending, not as a regulatory obligation, which is the case in India. At least 40% of banks' lending has to go to these priority sectors, but more of an opportunity. How are you going about this?
Sure. This again was one of the fundamental principles as we set out to build the model of the bank. Two bits. On the wholesale bank, it was a relatively simpler one where we said broadly we're going to be a working capital bank. We're not a project financier and all of that. And in the geography, the distribution, the mix of business, we said primarily we'll be a mass banking story. Right? And while we'll be present in the metros and the large cities, tier 2 to tier 5 India, we again were very clear would provide us a lot of opportunities. Interestingly, a lot of those markets are technically overbanked, but hugely underserved in terms of technology, products, all of that. So that as a market, the opportunity was staring us in the face. So we said we will build a mass bank, build high quality technology that will enable us to deliver banking services at a absolutely acceptable price point or below the market in that sense. So mass banking, I think, suited that approach. And yes, the word that you mentioned, priority sector, that phrase, that's a very Indian regulatory phrase. Includes agriculture, MSME, small marginal farmer lending, all of that. Traditionally, I think the challenge in the marketplace has been that a lot of institutions have looked at that as an obligation and therefore tried to fulfill that. We set out saying that let's look at it as a business opportunity and how do we kind of address that. The regulatory standpoint, of course, that 40% was comfortably met. We run a little north of 50% on that, including all the subsegments. But what is more interesting is that it's hugely profitable. It's a good quality portfolio. Delinquencies in that book of ours is as good as the wholesale book or better.
And in terms also of this space, there's a lot of change happening in the banking sector in India. As actually the banker has recently reported in the April issue, we look at all the new banking licenses that have been awarded by the central bank to small finance banks, to payments banks, and also universal banks that now have a stronger focus on financial inclusion sectors in the economy. So with this backdrop in mind, how do you see basically the competition in the local banking sector playing for you going forward?
Two bits. I don't think competition was less in any case till now. One of the things that changes, not just these licenses. These licenses, of course, will increase competition in some ways. But I do believe there will be some more players in the space who are, let's say, less efficient, who will possibly face the brunt of it first. But more interestingly, even before these licenses came in, payment providers, payment service providers, the equivalents of your iPay or Alipay model. In India, we have people like Paytm. There are a bunch of those people. They were all chipping at a business that a bank would do. Right? There were lots of them that were coming up in multiple ways. The fintech revolution has kind of put in a bunch of those players in the marketplace. So for traditional old players, it was not just about the new licenses. It was this new industry that was also disrupting. So I believe, especially for players like us, little smaller, more agile and nimble, this will be an opportunity. We look at a lot of these new incumbent players coming in, either the new payment banks, some of the new small finance banks, some of the existing payment service providers. All of them, end of the day, need to work with a full-fledged bank somewhere or the other.
So
To deliver. Absolutely. We are looking at it as a pure collaborative story. In some cases, actually working well together in terms of saying they provide one bit of the last mile, I provide the products, different bits for each player. For again, players like us, I think we can afford to, in a sense, also be part of the disruptive crowd with respect to what the market offers in terms of potential versus what we do, which is such a tiny part. We can certainly go out and disrupt the big players.
And what about the foreign banks in India? How do you see them as being a new, part of the banking sector?
One's been part of that journey too before. The foreign banks, interestingly, except for a couple of them that have, in a sense, stayed the course, even there, possibly a little more cautiously, there are quite a few of them who've either kind of frozen or not inching ahead, or not moving ahead in line with the market. And there's a bunch of them that are actually retracting, retracing, reducing the balance sheet, some actually even leaving the country. So for banks like us, I think that's another huge opportunity that's coming up. The kind of clients that they used to service, the clients that were used to high quality technology, high quality products, all of that, some of us come in and fill that space. The foreign banks eating in one side, the market itself growing with some of these people giving up some space, and especially for banks like us, where the base is very small, and the opportunity is huge. Okay. Absolutely.
Perfect. Well, Guru, thank you so much for joining us, and good luck with your new endeavors.
Thanks a ton.
Thank you.